Financials are driving what you see on the screen for the second day in a row, although you could argue this is a pretty broad-based rally on relatively thin volume. But my next guest is here to tell you that there's one good way to get into big by buying small. You don't want to buy the big banks. That's what Don Schreiber is saying. He, of course, is with WBI. Good to see you. Thank you so much.
Thanks, Liz.
A couple of billion here in assets under management that you've got, and you say, please avoid the big financials. Why?
Well, we like the small financials. We still find value there. So we're seeing strong earnings, strong revenue growth. You know, one of the companies that we really like is a bank out of Texas in Dallas and Fort Worth, the largest independent bank, Legacy Texas Financial. And it has really strong dividend growth, 2% dividend. And
can we get Legacy Financial up there so our viewers can see? Because this is an interesting pick here.
Yes. So it is a small cap. We are finding a lot more value in the small caps than we were in the large caps. Those are tough to find with still positive earnings and revenue.
What do you make of this two-day rally? 155 points today, 200 plus yesterday for the Dow Jones Industrials. Look, you do have this cloud hanging over the markets, or maybe it's a ray of sunlight. If you believe that good news is good news, the Fed may raise 1/4 of a point in June, or at least they're making all kinds of noise. It could be June or July. Market doesn't, at least at the moment, seem to be spooked by that.
Well, I think the market is looking for any reason to go higher. Bad news is good news is okay news, and this couple-of-day rally, while it feels good, I don't think it's going to stick. I think that the central bankers continue to talk the markets higher, or at least support them, and we see a big downside potential.
The markets, a big downside. The markets are not the economy. These are two separate things, so we can't confuse them for our viewers. You say a big downside, a correction, a recession?
Well, right now we're about 35% overvalued from a trailing price to earnings standpoint, and so we could see a correction just to get to normal PEs of 14 or 15 of about 30 or 35% on the S&P 500. Brings us down to about 1,300.
Would you advise people to buy then when we see that correction?
I think that what's going to happen is we're going to get a move to act. There's more populist opinion about the need for fiscal stimulus. Monetary policy is a short-term tool, and we need that long-term tool, which is fiscal stimulus, to come in. We even hear the folks that are out on the campaign trail starting to talk about fiscal stimulus. We think that's really good. It could launch a really significant rally.
Good to see you. We have Don Schreiber. We love him. Thank you so much on a day where we see big gains for the bulls once again. And the Dow is positive for the month of May.